Thanks. Can everybody see my screen?
Yes.
Is it like full screen too, Sydney? Or do you see like the little?
I see the icons at the bottom, but it's pretty much full screen.
Yeah, no. Let me make it truly full screen. How do I do this? New share. I think it's this one. Is that better?
Yeah.
Okay, cool. Hold on just a sec. Let me find my window so I know what I'm saying. It's kind of good to do. So yeah, let me just I know Mita introduced me, but I do want to make sure everybody knows that. So I do both buyers and listings. I'm kind of funny in a way. I actually, in our industry, it's all about the listings. I feel like when you begin being a realtor, it feels like there's a lot of pressure to be a listing agent, and that's sort of like the mecca. That's like what you should become. And I've just never really felt that way. So I want to make sure that everybody realizes that I'm coming to this with like sincerity. I love buyers. I kind of think I would rather work with a buyer most days of the week than a seller. So I have a lot of passion around buyers because I feel like they're more appreciative in general. So I think that's something that you can kind of shift your mind if you're not already thinking that way and you don't agree with me, or you think that you're kind of caught up in the sellers or the end all be all. I do think that you should really look at the pros and cons of working with both types of clients. But if you really do shift your mind and realize how much buyers need you, I do feel like that my buyers, especially, and one of the reasons that I've been so successful working with buyers is because they can feel that kind of coming out of me. They know that that's really in my heart. So I do encourage you to shift your mindset with buyers, especially with all the changes that are going on in the industry. I know that's probably one of the reasons people are here, because we're talking about adding value to buyers in a quick way. Like, you want to get that value in as soon as you can whenever you're meeting with them. But with all of the changes with NAR going on, we're going to have to do this job really well with buyers, y'all. We already have most realtors that start their business out working with predominantly buyers. The last thing you want to do is lose traction with them and not have your game like top notch, because now more than ever, you need to be able to get in there, meet a buyer, and make them feel like they have to work with you or they're not going to make it through this process. So that's kind of what I'm always thinking whenever I'm, from the first time I meet a buyer until the last minute, and even after closing. So let's go into kind of an overview of what I want to do today with y'all. Is I want to walk you through kind of a portion of what I would consider my buyer's presentation. And it's really the meat and the potatoes. I'm not going to do like a mock from beginning to end with what I do when I meet with a buyer, but I'm going to focus on the two core aspects that I think add the most value. And that's explaining to a buyer how to get a loan and the details of loan approval. Not full loan approval like I'm a loan officer, but from a realtor perspective, kind of in layman's terms, and then walk a buyer through the contract to close process. Not just the steps that they're going to take and what's going to happen during the process, but how they're going to output money. I feel like these two things are the biggest ways that we can add value very quickly when we meet with buyers. It's going to be really thorough, and it's going to seem like it's geared toward mostly first-time buyers, but I do want to let you know that I meet tons of buyers that have only bought one home before, but they've already gone through the process and they still have no clue. They just don't have a clue kind of what's going on. They don't really remember it. The first time they did it, it was a whirlwind. So don't think that this is just for first-time buyers, but I do think that that it is really important to have this stuff down, especially for first-time buyers, y'all. They have no clue what they're doing. And they probably should be some of the people that we have to convince that they need a buyer's agent, because they don't really know why they need us. I hope that, especially in the past, if you worked with a client, that they remember you and they know why they loved you. So if they've bought a house before, they're going to want you to work with them again anyway. So just keep in mind that this can apply to everybody. You don't have to do the deep dive on all of these things with every single client. It's your job to be discerning and figure out who needs what. So if you have joined me previously, I have taught you about building rapport. I've talked about things like bringing a gift to the first meeting whenever you meet a new client. And if you want any of those previous recordings, I think we should be able to send them. Sydney, if you could make a little note for me. But if you want, you know, me to point you to those, just let us know and we'll send you a link. But my biggest thing here is rehearse so you don't need scripts. And I know that sounds kind of funny because rehearsal kind of implies that you're rehearsing scripts. And I know that there's a lot of you know, scripting in this business. A lot of agents are into scripts. I think that they're great. And I know a lot of people need scripts because they just don't know how to get the right words out. So scripts are important, but I'm not a very scripted person, y'all. That's just me being honest. I don't really like them. That's just me. So if you rehearse and you actually know what you're talking about, you will never need a script. It's kind of a script, you just don't sound like it. And unless we're professional actors, y'all, most of us do a really bad job of delivering a script and it feeling authentic to people. So one of the biggest things I think that, like I mentioned at the beginning, is super important with buyers is they have to you have to be believable and they have to feel like you care about them. So if you're just rattling off scripted, you know, processes or the same phrase over and over again, and it's not coming from like a true feeling that you really care about them and you really are trying to teach them and lead them and guide them, they're going to pick that up from you and they're going to know. So what do I want to do? Like as soon as I meet a buyer, I'm going to value bomb them like from the minute I meet them. So that could be on the phone or that could be in person, but you always want to start off by asking a few discovery questions. So the idea is to find out enough about them so that you can teach them something they didn't already know. I may have said this in a prior presentation, but if you haven't seen the Sarah Jessica Parker movie, Failure to Launch, she talks about having if you're trying to catch a guy, to have him teach you something. That's like one of the little tricks because it makes them feel that connection that, you know, they've done this little teacher and student thing. And that's kind of what you want to do with clients, right? You want to teach them something that they don't already know because you want them to feel like you're their guide and they need you in the process. So when do I do kind of my 20-minute value bomb? I usually do it at the first house. I start a little bit of it on the call with a little bit of discovery, but then I typically always try to spend about 20 minutes on the kitchen countertop of the first house that I meet a client at. And I give them these guides that I'm about to walk you through. The two big things I'm going to talk about are the getting a loan process. You might want to spend about 10 minutes on that. Again, tailor it if they've already worked with a lender, they seem really savvy, and you've done some Q&A with them. You may not need to spend a full 10 minutes. And then I also talk to them about surviving the contract process and when they're going to put money out, and I spend about 10 minutes on that. So and the goal always is you need to leave them feeling like they need you in their life. So you need to be the one that they call. You've dropped enough value bombs and you've given them enough information that you've now armed them to go do something like call a lender and start working on their pre-approval. Fun little fact, I don't make everybody that I meet on the first meeting have a pre-approval letter. Lots of realtors do this, and I'm going to tell y'all, if you're one of them, I'm stealing your customers. I'm stealing your customers because when they called you first and you said, do you have a pre-approval? No, I need to call a lender. And you said, okay, well, here's my lender's number. Well, guess what, guys? They want to see the house. They want to see the house and they want to meet a realtor. And I'm going to be the realtor that they call that doesn't say that I'm not going to meet them and help them and be their value added partner and their guide through their process. I cannot tell y'all how many times I have taken another realtor's, not customer yet, obviously I'm not stealing somebody that's signed a buyer's rep, because they've told me, well, yeah, I called this other realtor and they wouldn't meet me without a pre-approval letter. And I'm like, I'll meet you because I'm going to teach you how to get a pre-approval letter. So that's just a little nugget. It works for me. I know a lot of people feel like they're wasting their time if the client isn't pre-approved before they meet them. And I kind of abhorrently disagree with that because I like to be the person that works with them and helps them learn. So I'm going to stop right here and make sure we don't have any chats or questions. Y'all can stop and ask me questions. Sydney, if you see anybody raise their hand with something that's really important, feel free to interrupt me because I the next part of this, I do it so many times I can get interrupted, and I'm perfectly fine to stay on track. So just feel like you can interrupt me anytime it's necessary.
Laura, so after the initial meeting,
Mhm.
What do you require as far as pre-approval? So just for instance, say you show them a house or a couple of houses one day, and then they don't follow through on getting the pre-approval. Do you show them again?
I guess the not follow through depends on what you mean. If it's literally they haven't called the lender and they haven't started the process, I'm going to do the gentle reminder, right? Like, hey, well, when I get to the part where I go through kind of my process and I ask some questions along the way, you're going to see that I'm pre-qualifying them myself. But generally speaking, I'm going to be tracking that process. And if I've done some discovery and I don't think that they're really capable of getting a loan, no, I'm not going to keep showing them houses. I'm going to do the whole, hey, let's figure out what your pre-approval amount is for. So we don't, go find a house, fall in love, and then we can't complete a purchase. We got to have that pre-approval letter. I don't mind doing gentle pushback on them. There's going to be a whole array of different people at different places, and that, but if they're just starting and they need to do credit work, then I know that's going to be a longer process. And so I'm going to put them in my pipeline, and I'm actually going to kind of love some of those people, y'all, because those are going to be my closings in 6 months or even a year. And I'm okay with that. So it depends on the situation, but yes, I'm not going to just keep showing them houses if they don't go talk to a loan officer.
Thanks. That's what I do as well. And I've had people tell me I'm crazy for doing it.
No, I don't think you're crazy at all. So when you're doing the discovery, I know this is kind of elementary, but I kind of try to do these on the first phone call. If not, as I'm kind of walking through the house right at the beginning, I'll ask some questions. I mean, sometimes you get a call and you just run to an appointment, y'all. You don't sit there and discovery call with them for 20 minutes. But I'll, ask them the questions like, where do you currently live? Oh, do you own or rent? Have you ever purchased a home before? Well, have you talked to a loan officer? Are you familiar with the mortgage process at all? And so when you've asked these kind of casual questions and you're doing it with true curiosity, that's another thing. I don't know how many new agents are on here, but I remember feeling like I was being invasive when I asked these questions. And so I encourage you to do not feel invasive. You are genuinely trying to get to know these people so you can genuinely offer them help and guidance. This is kind of where I think maybe a script matters. I think you should have a list of questions you need to ask. And it can be like this. It can just be these 4. But you need to practice whenever you go meet people, ask or get on the phone with them, asking these questions every time until they become very natural. And it's just part of how you get to know your buyer. It's no different than whenever you go on a date and you ask the guy or the girl, where do you work? What do you do for a living? It's the same thing. You're curious about them as people, and you're just targeting the questions to help you figure out when you go to do the 20-minute value bomb presentation, how to tailor it so that you don't end up spending too much detail on one aspect or another because you've already picked up on a few little context cues. I always ask for permission to take about 20 minutes to explain the home buying process and the lender loan process. And I tell them, hey, it all starts with pre-approval. And then that can also lead you to ask the question, are you pre-approved? If you are, did the loan officer do a good job of explaining to you, what it's going to take while you're under contract as far as spending money and what kind of funds you need along the way? So if they've already been pre-approved and you say, okay, great, what kind of loan are you getting? And they're like, I don't know. Then you're like, okay, would you like me to take a few minutes to explain the different loan types so that way maybe you can go back to your loan officer and you can ask some more questions so that you make sure that you're educated, because you might be approved for more than one loan type. And it's really important for you to understand the differences so that you can choose the loan type that best suits your situation. So there's already a little bit of a deviant, I'm deviating from the full thing I'm about to show you based on the fact that, yes, they're pre-approved. You think they might know more than they know, but then when you ask them what loan type they're getting, they don't even know what that means. And so you're like, okay, they can still use me, right? And so, you know, I say the words, my job is to be your guide and make sure I help you ask your lender the right questions so you understand what you're doing. Whether you've done this before or this is your first time, I use the term, I'm your translator. I'm the person who's going to translate from the lender's speak to the, you know, layman's terms and make sure that you understand what you're doing. And if you have any questions, I want to be the resource you come to. I say those words, y'all. You do not be afraid to be direct. If you've seen me before, I think I say it every single time I present anything. Don't be afraid to, it's like the whole ask for the sale. Don't be afraid to just state the obvious. You could even say things like, my job is to earn my commission. I want you to feel good about paying me or working with me. Again, if we get to the point where sometimes buyers pay commission, I don't know how often that's going to happen, but you need to be able to be bold enough to say those words. I want you to feel good about paying me to provide you a service. So, all right, so let's get into it. So this is, you're going to notice it's going to look kind of like a form. I have a actual handout or a PDF version of this. I'm happy to share with y'all, but I actually print these out. I'm not super high tech. Like, it's kind of funny. I'm old school. So I still bring paper to presentations. I like to write on the paper. So, I pretty much, I did take Amanda's advice. We're going to side note here, sidebar. For the most part, when I do open houses, y'all, I do not bring paper with me. I have a binder with all my stuff about the house in it, but I want them to scan or enter into the KV Core Open House app because I want to capture them digitally. So open houses, I'm high tech, but like when it comes to buyer's appointments, I'm still old school and I bring paper with me. So I'm going to kind of sort of pretend like I'm talking to the buyer here. But I'm not going to be like super role play. So if I deviate from like playing the role, don't be like, oh, I don't mind role playing anymore, but I'm not going to do it for you right now. But essentially what you want to do is you want to tell the buyer there are 4 parts to getting approved for a loan. There's your credit, there's your employment history, there's cash to closing, and your debt to income ratio. So all 4 of these are the parts that a lender is going to look at. Now, y'all need to kind of time me here because this is where I'm saying I want to be able to explain this to them and give them the high level nuggets in about 10 minutes. Okay. So I'm going to walk them through how they know what a lender is going to look for in these 4 areas. So I have this little worksheet that I fill out. So I have that on the counter. And as I'm explaining this process to them, y'all, I'm asking them questions so I can fill these little blanks out and check these little boxes. So the cool thing about going through it this way, in my opinion, is you're tricking them a little bit. So it feels like you're explaining stuff to them and you're being their teacher and their guide, but you're also collecting information. So this is where I am vetting my client and I'm sort of pre-approving them myself. I'm not a loan officer. I'm not trying to get all into the details, but I'm asking the high-level questions. And this is where you can get to the point where you can get really good at figuring out who's going to be a faster close and who's going to go into your pipeline for future business. So credit score, the score and the content of your credit report matters. And there's 3 credit bureaus. The lenders look at your middle score. So all 3 of them, they look at the one that falls in the middle. For FHA loans, they look, they ideally want your credit score to be 620 or above, and for conventional, about 660 or above. Obviously, this depends on the exact scenario. And when they're looking at your whole credit report, your credit score could be a little bit higher or lower, and you could still get approved. It just depends on the whole picture of your credit situation. If you're going to do a joint application because you need both people's income, you have to remember that the lowest score wins, which really means the lowest score loses. So the lowest credit score is the basis for the approval. So you can't just use one person's income to make it so that you can get approved for a higher priced home. If their credit score is lower, or if it's not low enough to qualify, then they pull the whole file down. It's really a good idea not to have recent foreclosures or repos, but sometimes those can be explained, and it depends on the loan type, how old they have to be. So what do you think your credit score is right now? If you had to guess, it doesn't have to be perfect. And then they'll tell you, you fill in the blank. Okay, great. Have you had any foreclosures or bankruptcies? Okay, no. Have you had any auto or any other major repossessions for anything that would be on your credit report? No. Do you have any collections? Yeah, I have some medical collections. Okay, well, medical collections, I usually tell them they're a little bit easier to overlook, and a lot of people have those. But all of these are things that, you know, your loan officer is going to look at and they're going to ask you about. I don't want you to think that because you may have one or some of these that you're not going to get approved. But I do want you to know that these are the types of things that a lender is going to look at whenever they're looking at your credit. So next, I noticed now that I did not put like employment at the top. So next is going to be, the lender is going to look at your employment. So they're typically going to want 2 years of work history. This isn't always 100%, you know, required, but they do like you to have 2 years of steady employment. They want to look for gaps in employment. So they want to know whether or not you have taken 3 months off of work. And if you have, why? So for women, if you took off work to have a child, that's usually explainable. Are you W-2 or are you 1099? And check the boxes as you're asking the questions. Okay, well, you're 1099. Are you self-employed? Oh yeah, I'm self-employed. I own my own power washing business. Okay, well, have you been doing that for at least 2 years? And have you been, you know, filing tax returns for that business? Oh, okay. You know, just kind of chit chat. You don't need to be grilling them like you're a loan officer, but you do need to know enough to ask these questions. Have you been steadily making more money, or is your income inclining, or is it declining? And do you have any overtime or bonuses? These are things that the lender is going to look at because they're trying to figure out how much house they can approve you for. And down where I'm at, y'all, I have a ton of they're operators at plants, and they make really good money for their education level, and they work a ton of overtime. Well, the problem with that is it's fantastic, but a lot of them, if they just started making a lot of overtime because they had a big turnaround at their plant or whatever, they will like have gotten 3 really good months of paychecks because they've been working a whack load of overtime, and they think, oh my God, I can get approved for a $500,000 house. So in my area, I know my buyers. So I know I have to ask these questions, and sometimes I have to dig into their overtime a little bit, because you also have to remember sometimes these people are going online and they're doing a mortgage approval calculator and they're putting in their full income, and or sometimes the opposite, they're putting in too little income. But you just have to know your audience, because if they're using online tools and they think that they made, you know, $15,000 last month and that's what they're going to get approved off of, I kind of use this as a expectation setting exercise, so that when they hear me say this stuff, when they get to the loan officer, they're not completely deflated, right? Because the loan officer is going to look at their overtime history and they're going to average it, and they're not necessarily going to give them full credit for their last month's overtime. And then I ask them if they have gaps in employment, or if they're really young, possibly. Did you just get out of school? If I hear that when they're talking and I'm asking about them, then I'll say, okay, well, because they'll be like, I don't have 2 years. I just started my job. Oh, well, did you just get out of school? And so as I'm asking and explaining, I will say, hey, you know, approximately what is your gross monthly income? So again, I'm filling this out. They think I'm doing like a cute little intake form, and I'm teaching them at the same time. And I'm filling out this little 1-pager, and it's interactive. And that way it doesn't feel pressure. It's not pressury, but I'm collecting what I need, so I know what they can get approved for possibly, and how far away they are from getting a loan if they need to do some credit work. Next thing the lender is going to look at is your debt to income ratio. So you'll hear people call that DTI, and 50% is a rule of thumb that lenders look at. They want you to have about a 50% debt to income ratio. What are debts? So debts are anything that's showing up on your credit report, and it's just the minimum monthly payment. So I take this opportunity to say, look, don't think you need to go out and pay off if you've got a $2,000 credit card bill or like a $10,000 student loan. When lenders are looking at debts and they're talking about your DTI, they're wanting to know what your minimum monthly obligations are, so they can figure out how much monthly payment you can afford for your new mortgage, including your taxes and your insurance and all that good stuff. So your income is your gross monthly, it's before deductions. So a lot of people get really confused about what gross means, and they think they know, or they've gotten confused because they've read online and they still don't understand. And so I say it's your big number. It's what your income is. So what is your, approximate annual income? You can ask it that way, and then you can divide it by 12 right there on the spot and say, okay, well, your monthly gross is about $6,000 a month. And then I always say, I just want to mention, in case when you're talking to your loan officer and you think you're going to get an FHA loan, that the non-borrowing spouse's debts count too. So if you're married and your spouse isn't going to go on the loan officially for their income, they are going to look at their debts. So you need to know that, because it matters. And I've had a lot of disappointments over this situation, y'all. So that's why I personally put it on here. And I even have it on the little worksheet where I say consider a non-borrowing spouse, because if I'm having the conversation and they know, and sometimes I'm checking this box just to say that, hey, I talked about it. I use this form differently depending on the situation. And I'm not saying that you're checking the boxes on this form to say that we do have to. It's just to make sure, this is kind of to make sure you talked about the things. We also want to talk about collections here. So if you have some old collections, just note that even though you're not paying a minimum monthly payment on them, sometimes the lender will look at those collections and they'll assign a dollar amount to them, because they want to assume that you're going to be paying that collection off. So just keep that in mind. And then, do you have any other, maybe not on your credit report, but that could affect your DTI calculation? Do you have any child support? Do you owe any taxes? Do you have any government loans that you're paying on that might not show up on your credit report? So that's debt to income ratio. And then the last part about, and probably one of the more important things to talk about that leads us right into the contract to close and the monetary expenditures, is how much money do you need? How much cash do you need on hand? And then, asking them how much cash they have on hand available to them. So down payments are going to vary depending on what type of loan you get. So FHA or conventional, we can sometimes get you as low as 0% down with either loan type. There are some conventional 0% down programs. And with FHAs, we can get you first time down payment assistance grants. And then closing cost, I typically use between 2.5% and 3%. As far as just a broad calculation, and that kind of covers everything. So it covers everything from your escrow fees to your any of your prepaids, to your lender fees. Of course, some of this can vary, but 3% is a safe number. So where I sell, my average house price is probably $250,000 to $300,000. So I'll tell them, have about $9,000 in mind for your closing cost. And then your down payment is going to vary depending on which loan type you get. So if I'm talking to a first time buyer, I probably just use 6.5%, and I do the calculation real fast if I know we're standing in a $250,000 house. And so I say, okay, so your big number with no down payment assistance at a typical FHA loan with no seller paid closing cost is, and I do the math and I say, okay, 6 times 3, let's just use $18,000. How do you feel about that? Like, is that something that you can come up with? It can come from a 401k. And if they're looking at me like deer in headlights, they're like, well, we have about $4,000. And I'm like, okay, well, you know what? If I've already figured out that they seem to have pretty good credit, I'm like, okay, but you've got good credit and you've got good job history. So, we could figure out something with $4,000. We just need to go into this eyes wide open. And we need to know that you're probably going to need down payment assistance. And we're going to make offers, and we're going to be asking the sellers to pay some of your closing costs. So I want to set the expectation with you that when we're looking at houses and we know we're going to have to ask for closing costs, you have to be thinking about your offer, in accordance with that logic, because you can't come into houses and make super low ball offers and then ask them to give you $5,000 toward closing. It just doesn't always work that way. So you're using this opportunity to also set some expectations. We all know the buyers I'm talking about. And it really helps to do this up front because they feel educated, informed, and then you're giving them kind of realistic expectations so you don't waste a bunch of your time. And then sometimes reserves are required. So it's not just about how much money you have on hand right now to get through the transaction. Depending on your whole scenario, sometimes the lender might require you to have some extra money in savings, especially if your credit's a little bit weaker. And one of the things I do, y'all, is I use this pie shape, because what I do is I explain to the buyer, I'm like, I have this whole scenario built on a pie shape to kind of give you a visualization that if your credit pie slice is smaller, you might have to have a bigger piece of pie on your cash on hand, or you might have to have a better debt to income ratio. You're a whole pie, but the different parts could be different sizes. And the lender is looking for you to have a complete whole shape that's made up of these parts. And sometimes one of them has to compensate for the other. Any questions? Lots of chats. I don't know. Let's see. Sydney, are you monitoring these?
Yeah, they're putting in their emails so we could send them some stuff afterwards. But I did see above, there was some questions. I know you touched on it, but about the buyer's rep in your initial meeting, how would you bring that up, or how would you change?
Sure. So I know we here have a one-page buyer's rep agreement that EXP provided us, and I think that's kind of the trend that's going on across the industry. So everybody should be seeing something like that coming out of their broker. I know I got an offer from, I feel like it was a Remax agent a couple weeks ago, and they already had that. I don't know if they did it on purpose, but I got a copy of it as a seller's agent. But I think most brokers are doing that now. It's kind of a different class, y'all, but essentially what I'm going to start doing is when I'm on the phone with people and I meet them on the phone for the first time, after I've done some of this preliminary kind of getting to know them, I'm going to just drop it in that conversation. I'm going to say, hey, do you already have a realtor that you signed an agreement to work with? No. And I'm going to say, okay, well, there have been some changes with the Texas Real Estate Commission. That's not really who it is, y'all, but they sound really, somebody on here might yell at me. I'm not a broker. I like using TREC because it sounds official. Maybe you say with our real estate commission, or I don't know, we got to come up with an authority where we have to get these agreements signed at the time that we meet a client whenever we're going to go open a door for you. Amanda, raise your hand. Yes, say it. Go, girl.
So I do the assumptive close where I assume that they know what's going on. That way they're not like, oh, I have no idea. I'll go, you've heard about that lawsuit thing, right? It's like that big NAR thing. It's all over the news.
Mhm.
They're like, oh yeah. And then you go, this is why we have to have that form. And then they're like, oh, so I don't even blame it on I blame it on the lawsuit.
I like it. That's still, it's like an official thing. That's what I'm saying. Like the thing about realtors is when we ask for stuff like this and you feel like it's coming from you, that's when you feel more awkward about asking. If it's an outside force that you can't control, it's easier to have the conversation for you psychologically. So that's kind of what Amanda was doing there. You see this lawsuit? They issued additional requirements. So up on our first meeting, I have this one-page form that gives me the authority to let you into the house, and I'm going to bring it with me, something like that. I don't think it has to be super high pressure. When you get the form in front of them and you need to explain it to them, that's a different class, y'all. I can't go into that right now. Don't have enough time. So, but yes, that would be part of my paper that I would bring with them. May start doing it DigiSign like before, like, hey, I'm going to send it to you through electronic signature, and maybe I start having my assistant or something send those out. It's a possibility. So now that I've gone over, kind of the first initial steps to get a loan, let's talk about, briefly, let me walk you through from contract acceptance to closing, how you're going to spend that cash that I stated that you need to have on hand, and just the high level nuggets of how we get through a contract on the buyer side. So we start with contract acceptance, and during week 1, again, this is my market specific, y'all. So like, I'm going to tweak the numbers if I know they're shopping at a higher price point, but my average price for the person I'm going to be explaining this to is probably going to be in the like 250 to 350 price point range. So I tell people it's really good to have about $3,500 to $4,000 on hand on day 1. You're going to need to make an earnest money deposit to the title company. That's 1%. Typically, you're going to pay an option fee, which is you paying to have your inspection period. So that's on average about $150, $200. And then your inspections are going to cost you somewhere between $500 and $800. So all of that added together, to be comfortable, I need you to have about $3,500 to $4,000 on hand. Do you think you can do that? Does that sound reasonable? Sure, it sounds reasonable. We've got $10,000 in the bank. Great. And during this time, during this first week, you're going to have your inspections, and then we're going to, if necessary, negotiate repairs or credits from the seller. And then once we're through with your option period, it's a little bit less stressful because we know everybody's in agreement and we've got our contract terms pretty much finalized. And then we spend the next 2 to 4 weeks where you and I always say this, you and I are not going to talk every day. We're not going to talk nearly as much because you're going to be mostly working with your lender. During this time, your lender may ask you for your appraisal fee up front, or they will at least do a credit card authorization for it. And that fee can be anywhere between $600 and $800. So during this time, they're gonna order the appraisal. He's gonna come out and do the inspection and do his report. If a new survey is needed, a surveyor is gonna come out, and then the lender is gonna be working on your conditional loan approval. So I have little asterisks by the inspection and the appraisal fees on purpose, because these are costs that if you decided to terminate after your option period, after your inspection period, for kind of no good reason, like we don't have a true contract term to get you out of the contract, you lose this money. So I just want to make sure that you're clear that if we make an offer on this house, I want you to be very serious, because there's about a $1,500 potential loss for you if you change your mind. So the good news is that I'm a really good realtor and I understand our contracts. My job is to protect your earnest money and to make sure that you understand your contract outs, and to make sure that we do a really good job investigating and looking at properties so you make a really good decision. But I want you to understand the process, and I want you to understand the risks. That's why you have me here. And then finally, once we get your conditional loan approval and get toward the last week of the contract and closer to closing date, you're going to choose your home warranty, you're going to finalize your insurance, you're going to schedule your utilities turn on, and then the day of closing or a day before, we're going to do your final walkthrough, and then we're going to head to closing. So the money that you're going to come to closing with is going to completely depend on what type of loan and your down payment. It's going to depend on your closing costs that were calculated based on your insurance rates and your lender fees. And we're going to subtract any seller credits that we get, that we negotiate. And then we're also going to subtract your earnest money and your option fees, because those are credited toward your total due on closing day. And then do you have any questions? So that is, well, let me go back. That is the spiel I do. Now, again, I can go into any of these areas in more detail. I spend more time on the upfront conversation if it's a brand new buyer about the loan process. And how to get a loan, because that's the most confusing part. And most importantly, that's step number 1. And I also want to make sure that I'm kind of doing my own mini pre-approval. And again, this works really, really well for people who haven't gone through a full pre-approval process. And then this whole contract roadmap is good because you can use it for both things at the same time: how much money they need and when, and what are the key steps that go along with the process, so they kind of know what they're getting into. Does anybody have any questions? Also, when talking about how much money they need to bring, what's the question? Maria, what's your question? No, Maria. I think her question is with strategies with the settlement, talking about how much money they need to bring to closing. So yeah, so if we start seeing any changes in the market where the buyers end up paying our commission, we will have to tweak this conversation, because it will be considered one of their closing costs. I'm just going to take a minute to reiterate. I've done it multiple times. I'm not changing how I do business as a listing agent. I'm not changing the expectation that I set on my sellers for offering to compensate buyers agents to bring them business, to bring them a buyer to purchase their home. I'm not making any changes in that regard. So I do think that our business is going to continue, hopefully as close to usual. We need to be prepared for possible changes, but I'm not changing the conversation I'm having at this time. So that was fast. Look at me, done early. When does that ever happen? I think, Sydney, we can send out the one page. I've got the one pager. I also have this that I can send to everybody. So this is an infographic that's good on a mobile device. I could divide it into like a PDF, or maybe Sydney, you could help me. But it's a really good, like the difference between FHA and conventional for down payment, interest rates, mortgage insurance, what credit scores are required, and if you have to have reserves or not, and how much, and then debt to income ratio, what they're looking at. So I'm happy to share that. I'm happy to share the one pager. And then what do we have? What do we have coming up, Sydney?
Let's see, we have new topics every Tuesday. I know Hui's doing one next week, and that one should be good as well. So be sure to tune in and follow the Eventbrite link so you'll see the updates as soon as we post them.
Cool. So Sydney will grab everybody's emails. I guess my question is, does everybody think this was helpful? Do you do this when you're presenting to buyers? Is there stuff here that you didn't know? I'm just curious.
I thought it was very helpful, and it kind of it's nice to know that other people doing things similar kind of validates a little bit of what we already do. So that's nice to know.
Yeah. I think it's really important, y'all, that you nail this, this whole like information packet. If you don't know it in your heart, you can't deliver it with ease. And I can have this conversation with anybody I meet. I don't have to have the paper in front of me. But as I've been challenged with the NAR thing and everybody coming up with these like, to me, it's kind of frou-frou, like gimmicky things about how to work with buyers now. Like it's different. Y'all, this is the meat and potatoes. This is what we're here for. This is the job of a realtor. So when you're working with a buyer, this is exactly what they need and the content you should be providing. You can do all the other stuff. You can be, get to the bells and whistles, but I can guarantee you that if you can nail this kind of content and be their guide and help instruct them, and again, be that translator, because they're really kind of, a lot of them, lost in a sea of a lot of terminology that they do not understand. You need to understand the terminology. And then I guess one thing I've been asked before is, how do I know all this stuff? Y'all, I know all this stuff because I ask my lenders questions and because I practice saying this stuff over and over again. Yes, I created myself the little cheat sheets to take with me, but I don't need those anymore because I've done it so much. So hopefully me sharing the page with you, you can print it out and you can take it with you and you can start practicing going over each section. But I do encourage you to focus on the real meaningful content that buyers need first. And then once you get that down, then do like the sexy fun stuff, because it's easy for us as realtors to get caught up in that. But we skip over, in my opinion, the base, like the foundational things. So that is it.
Thanks, Laura. I agree. With Janet, it's nice to see that other agents are doing things sort of the same way, and I think this would be great for for new agents, because nobody teaches you this stuff.
Nope. No, they don't. I agree. Well, thank y'all so much.
Thank you, Laura, for doing this. It's really good, really appreciate it. And for everyone who put your emails in or RSVP'd, we'll be able to send you all this information afterwards.
Thank you, Laura.
Thank you. Everybody have a
Thank
good
you so
day.
much.
Bye.
Bye.